Welcome back to Newsmakers. The newsmaker of the moment, in fact of the week and of the month, is Ajay Birla Capital. And now I have the CEO of that company, Ajay Srinivasan, joining me. Ajay, first of all, congratulations. We were all expecting an AB Capital listing at the outer limit at 218. My table did not even run beyond it. This surprised you?
Well, I think we're pleasantly surprised, let's say. I think it's a strong validation from the market that our business model works. It's a bit humbling when people from the market put a value on the business that you spent so many years building. But we're very satisfied and happy with it.
Yeah, but this is also first day euphoria, and we could see that in the circuit filter and all that. Yeah. Do you think it will correct? Is this the valuation that you as an investor would have given it?
Difficult to say, Latha. I mean, I think I'm always going to be biased about my business. So it's difficult to say. I mean, this is a market, so many variables. I can't really comment on that.
But could you even investigate who was so enthusiastic in the pre-open that it kind of marred your first day celebrations?
No, actually, nothing has marred our first day celebrations. I think we're very happy with the way it's come through. Just getting a valuation more than 50,000 crores in a market like this, I think is testimony to the business that we've built.
Okay. Well, no, it's just that now when the filter opens, there will be people who will want to sell. So I was asking you, where do you think it might settle?
Difficult. I really don't know what the book is like, what the buying and selling is going to be like. But it's early days. It's still in in the cash-based delivery. So I think you're going to see a little bit of volatility probably for a while.
Okay. Well, now let me come to the business itself. NBFC, life insurance, AMC. Which do you think is going to be your flagship within these units?
So I think we are different from many other players in financial services because we have fairly large businesses underneath Aditya Birla Capital. So our life insurance business is a top 5 business, asset management is a top 5, NBFC is top 5, our general insurance broking is a top 5 business, we have a personal finance portal which is also top 5. So we have a number of businesses where actually we have scale. If you ask me a question where we think the next 3-5 years growth is going to come from, I think I would say our NBFC would probably lead the charge. There's just such a big opportunity there. We're well positioned. Credit is coming increasingly from non-bank sources, so there's a lot of tailwind we have in that segment. Housing, we are relatively new, so we still think there's a lot of opportunity to grow, especially as we go into the small towns. But I wouldn't underestimate the value of growth in the asset management business and the life insurance business, because let's just look at the fact that we're seeing so much money now coming into financial assets at one level and also coming into equity type assets at another level. And with real rates being where they are, I think you'll continue to see financial assets gaining. So we see again tailwind for both life and mutual funds. Our life insurance business last year grew at over 30%. First quarter growth is again similar. Asset management business is again growing faster than that. So there's a lot of macro things that are, I think, in favor of the businesses we operate in.
Okay. Well, let me take the weak link first, and I'm calling life insurance a weak link because if you compare the persistency ratios, whether 13-month or 61 months, you rank perhaps 5th or 6th after the first 5 big boys. The HDFC, ICICI, SBI. Is there something that you will want to do in the life insurance business to pull it up?
So like I said, I think we've already started seeing the life business turn. Last year was a strong growth. We've seen that growth coming through in this year. Our focus really in the life insurance business is to sell more traditional policies. I think that works much better for us. Protection is an area of focus for us. We're selling longer term policies, focusing a lot on persistency as you mentioned. All of these are really going to mean that you start building much greater margins and a much greater value of the book we operate in. We've recently tied up with HDFC Bank under the open architecture regime. That opens up a large bank channel for us. So we've traditionally been agency focused. 70% of our business comes from agency. This opens up a very large bank network for us. So I think a lot of things are changing, and hopefully all for the better.
Yeah, exactly. Now that you are, until now you were subsumed under the group in various ways. Now that you're on your own, do you think there can be some game-changing move in, say, for instance, insurance?
So
Or in any of them, which one do you think there will be game-changing moves?
So I think the only thing that's really different from the past today is that we have currency.
Okay.
So I think the fact that we can use that currency for things and opportunities in the market is really what today has given us as an additional opportunity. So we will obviously look at opportunities across all the segments in which we operate: life insurance, asset management, NBFC, and wherever we see something that makes sense, we'd be very happy to look at it.
What can you give some number to the growth in, say, for instance, NBFC? That's your fastest running horse, over 30% even in the last.
So we've actually grown 44% in the last 5 years. So it's been a very quick clip. Last year alone we grew at about 35%. My sense is, you should see 25 to 30% kind of growth rates in the NBFC business. Our focus.
Life insurance?
So life insurance, like I said, we've seen 30% last year, 30% in the first quarter. So there's no reason why we shouldn't believe that kind of rate of growth shouldn't continue, at least for the foreseeable future.
Will you go the inorganic route? Will you want to buy any unit in NBFC? Or in life insurance for that matter?
So like I was saying, I think now that we have currency, obviously we will look at these opportunities, but it has to make sense to us from a value creation perspective, and I think that's where we often struggle in this market, because you don't always find obvious value from the opportunities you see. So that will be the filter that we will actually put all of this through.
But where might it come, you think? Are you more likely to buy an NBFC or more likely to buy an insurance?
Actually, if you look at it, Latha, across the spectrum, consolidation should be a theme that's playing out, because there are long tails in most industries in which we operate.
And it is playing, to be fair.
I don't think we've seen so many yet. I think, given the long tails, you should expect more. We've seen less. And I think that's partly because the expectation of buyer and seller hasn't met. But I think you should see opportunities as you go forward. I think you'll see opportunities in.
But you don't want to choose which one it might be.
I think
it matter housing finance.
Yes.
Okay, let me pick one of three.
Yeah.
Will you be going in organic in housing finance or in life or in NBFC?
So we would look. I mean, what we would be looking for in each would be different. So it really then depends on the platform that comes up, and therefore in life insurance, I think a distribution platform will be very important for us to build. In home finance, we are still 5,000 crores book. If we can get scale, that could be interesting for us. In asset management, we're looking to build equity assets. Again, if we could get reasonable equity assets, that could be interesting for us. So I think it'll depend on what's available, and again at what price we can get.
What may be likely here in calendar 17?
I think hopefully you'll hear that the existing businesses continue to grow. We've had a very good and long track record of growing each business we start. We are good at setting up new businesses and building scale. We're good at gaining market share and therefore growing faster than the market. And I think hopefully doing more of the same, shouldn't be a bad thing.
Which will need capital in 12 months?
So our NBFC, our housing finance company, and our health insurance. These are the three largest consumers of capital at this point in time. I think the NBFC, housing finance just need money to grow. Health insurance is a 5-6 year gestation business, so that needs capital to get to scale. That will be the primary consumers of capital.
At one point you all had plans that payment bank will be something that your finance company can piggy bank on, or the other way around. Is that plan still a viable one?
So I think given the idea of Voda merger discussions, that this has become a part of those discussions. So at the moment it's kind of, we're waiting for solutions on those issues before we kind of figure out what we do on this.
Okay. Ajay Srinivasan, pleasure speaking with you. All the very best.
Thank you, Latha.